So what market conditions make my business more investable or increased its investability? Is it investment worthy? Is it an attractive investment? And so the first thing that investors are going to look at is the cyclical nature of the business. The reality is that investors crave stable cash flows whenever possible. Why is that? Well, that predictability makes the business more scalable because it's easier to plan around. Okay. Let's say over 3 years, I make 15 million of net, right? I do 10 million last year. I'm going to do 1 million this year and I'm going to do 4 million next year. Okay. Versus I'm able to do really 5 million each year. Well, in that second scenario, right, you can plan for growth much better. And lenders, especially, right? If you're looking at debt or if investors are coming in, they usually want to bring in some debt or have credit available. Lenders have an especially strong preference for stable cash flow because they want to know that you're going to be able to make your payments. And so the more cyclical it is, the more challenging it is for them to feel comfortable lending. The second market condition I wanted to mention is really understanding where your customers' funding source is coming from, right? So it's almost like your customers' customers. Do your customers tend to dissipate when the economy is soft, right? We did some work for a group that was in the fine jewelry space, all right? And, that's discretionary income. And so that business can be really volatile in a challenging economy. A great place to be is if you have stable government funding from a government program. So, for instance, we're working right now with a company. They actually make what I would call like cockpits for 911 operators. So if you're a 911 operator, you have just all these monitors, screens, telephone technology, right? That surrounds you, and these guys make all of that. And the really cool thing is, if you get your cell phone bill every month, and it's not true in every state, but at least in Colorado, you'll see at the bottom of your cell phone bill, there's this emergency services line, and it's like, 99 cents a month, right? But really where that 99 cents is going is it's going to fund emergency services, to fund 911 and things like that. And so for this business, because they're part of that ecosystem, that funding is very secure, and their buyers always have budget for being able to upgrade their products. Okay. So that's something that investors find really attractive. Or your funding source could be insurance driven, right? Medicare, Medicaid, you may not get paid quickly, but at least you'll get paid. Or things like car repair, right? If, most drivers, if, get hit or get in an accident, that repair is going to be covered by insurance. And so it's not coming out of the consumer's pocket directly. And so, the car repair industry is very steady because it's really the insurance companies that are funding it. A couple of other things, end market diversity, right? So if you are stuck in one of those more cyclical channels, right, where it's like, well, I'm in this industry, what am I going to do about it? How can you diversify into other markets or things like that? So another example, I have just talked to a company, and what they do is they make trade show exhibits, right? They actually manufacture trade show exhibits for T-Mobile and Pepsi and things like that, the really fancy trade show exhibits. Well, how do you think that business did during COVID, right? No trade shows going on. So they definitely lost revenue, but they only lost actually about half their revenue, whereas their competitors lost 90 to 100% of their revenue. And how did they do that? Their competitors are going out of business, but this business survived. Well, it's because the business owner a long time ago realized that when trade shows aren't happening, these companies need somewhere to store their exhibits. And so he created a business line renting out storage space for exhibit booths while they're not in use. And so during the pandemic, he wasn't able to build new exhibits, but at least he was getting the monthly recurring charges from having those booths in storage because he had diversified his end markets. And the good thing is now he's actually one of those guys that's bursting at the seams because his competitors have gone out of business and he's just gobbling up all their work.